This is Horizon's Middle East and Africa. Our top stories this morning. President Trump denounces Ukraine's Volodymyr Zelenskiy as a dictator, saying unless a deal with Russia is reached, he won't have a country left. The world's foreign ministers converge on Johannesburg for the first of South Africa's G20 meetings. But while the new US administration will be a hot topic of conversation, Secretary of State Marco Rubio is skipping the event. And Israel charges troops over a prisoner abuse incident which divided the country, the first such case since the start of the war in Gaza. Well, it's just gone 8 a.m. across the Emirates. It's 3 p.m. here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at how markets are tracking at the moment. We did see yields on US Treasuries easing back a little bit, particularly on the 2-year. This is on the wake of the Fed minutes. There was some discussion of pausing or slowing the balance sheet runoff, particularly as more clarity is awaited on the debt ceiling situation in the United States. We got the 10-year yield right now, 451.90. S&P futures a little bit softer by about 0.25% at the moment. We've got crude steadying. That's holding gains, sort of, on a report that shows a potential build in US crude stockpile. Meanwhile, on the supply side, there has been some production and export disruption in Kazakhstan and obviously Russia as well. Got Bitcoin there because it didn't change very much, despite President Trump reiterating his desire to make the US the world crypto capital in a speech earlier today. It didn't have much impact on currency markets either, from fresh tariff threats, the warnings on Ukraine that we'll get to in a moment either. So it looks like some of these Trump trades, including crypto, might be getting a little bit played out. Well, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril, what are you watching?
Yeah, Paul, Asia's stock gauge down for yet another session amid those minutes from the Fed showing caution about rate cuts, but also not helping what we're hearing from Trump. Somehow lumber is in the mix as far as tariff threats are concerned. We are seeing the Nikkei down today, but of course, we also heard how Trump says a new trade deal with China is possible. That's helping to prop up the renminbi offshore, and it is also a climb on the yen that we're seeing today. But for the stocks in the region, particularly in the Hong Kong markets, I think the key test today is going to be the earnings results from Alibaba. It is, of course, going to be about the cloud revenue that will give us clues on how AI is working. And this is a stock that's run up about 50% since the start of the year. So a lot is at stake here amid the DeepSeek AI rally. Options traders are expecting a bigger than usual move after the results. Paul.
All right, Avril Hong in Singapore, thank you. Well, as I mentioned a moment ago, President Trump has stepped up his attacks on Ukraine's leader after earlier labelling Volodymyr Zelenskiy a dictator who won't have a country left unless he moves fast on a deal with Russia.
I love Ukraine, but Zelensky has done a terrible job. His country is shattered, and millions of people have unnecessarily died. And you can't bring a war to an end if you don't talk to both sides. You got to talk. They haven't been talking for 3 years. So we hope to see a ceasefire soon and to reestablish stability in Europe and the Middle East.
All right, Trump was speaking there at a Saudi-run investment summit in Miami. For more, let's get to Bloomberg's John Harney. And John, this notion of calling Zelensky a dictator, elections in Ukraine have, of course, been delayed by the war. I mean, how is this being greeted around the world? We heard from one politician, the opposition leader here in Australia, describing that those comments by President Trump as incorrect. Peter Dutton called Vladimir Putin a murderous dictator. How helpful are these remarks in bringing the war to an end? And what's the risk of Ukraine having to carry on here without US support?
Well, it marks, to say the least, a stunning reversal for an ally or a country that had been the chief ally of Ukraine, that supplied not only vast quantities of weapons and other aid, but also forged a strong alliance that even enlarged NATO. So it presents a enormous dilemma for President Zelensky as to the war is about to enter its third year, and even as his relationship with President Trump rapidly deteriorates. Now, this reaction has reverberated across the world, but it even had some opposition or some criticism from Republican allies of Donald Trump on Capitol Hill, defense hawks, if you will, who remain supporters of Ukraine in against the Russian invasion.
Yes, so it raises a whole number of questions, and in many respects we're used to hearing these kinds of remarks from President Trump. But realistically, would the Ukraine be able to fight on with only European allies and support? And what does it mean more broadly for the relationship between the US and Europe and Ukraine?
Well, Europe was already angered. European leaders are already angered that they were more or less frozen out of these initial talks in Saudi Arabia, and it was going to be a tough. It's going to be very tough for Ukraine to continue without United States support. Now there has been, not speculation, but talk that this amounts to an opening gambit. These remarks by Donald Trump to sort of get both sides talking, and that way a deal could well be forged. Now, these talks have just begun. Formal negotiations, have yet to serious negotiations have yet to get underway. Much remains to be resolved. So it's not too late. We can't say that there will not be a negotiated solution, though, that Ukraine is doomed to defeat. But it's certainly a remarkable change of events from just a few months ago when the Biden administration was still in power.
All right, Bloomberg's John Harney there in Washington. Well, South Africa is hosting the first G20 Foreign Ministers Summit since President Trump returned to office. However, Secretary of State Marco Rubio will not be in Johannesburg, citing an agenda that includes, as he puts it, global warming and DEI. So for more, let's get to Johannesburg and Bloomberg's Jennifer Zabasaja. So, Jen, what more can we expect on the agenda?
Yeah, Paul, listen, this is not just the first G20 since President Trump became president. It's also the first for the African continent as the host of the G20 presidency. So President Ramaphosa here in South Africa was really looking forward to bringing together these 19 member states and the EU and the African Union to address some of the issues that he sees top of mind. That includes debt financing, also inequality, climate change. But the fact that we are not seeing the top U.S. officials as a part of these discussions is a bit of a concern as far as the agenda goes. But still, we've heard South African officials say that they're going to press on with the theme, which is solidarity, equality, and sustainability. And a lot of our reporting has suggested that potentially with the U.S. taking a step back, we see other nations begin to step forward. And I'm talking about the nations that also make up BRICS, so the likes of China and also potentially Russia. And so, not only is Marco Rubio not going to be here this week for the foreign ministers, next week we will not see Scott Bessent. And so you have to wonder how the U.S. then is thinking about their role in the G20 moving forward. But yes, we will start to see officials arriving later today.
Yes, the idea of the US leaving the G20 has been floated as well. But just in terms of their absence, let's talk a little bit more about that. I mean, to what degree does this change the landscape in Africa? You mentioned China. This could open the door for China having a much greater diplomatic presence.
Absolutely. And Paul, as you know, we've seen that over the past few years and really just in the first few weeks of this new Trump presidency, we've seen Trump really take a step back from a number of multilateral institutions. And, you know, it's not to be forgotten, though, that we have seen the G20 and a lot of the support and cohesion around it erode over the past few years with things like the war in Ukraine and also with Gaza and disputes over that. But still, the U.S. makes up a significant portion of this grouping together. And not only that, South Africa is set to hand over the presidency next year to the U.S. So you have to wonder, what is President Trump thinking about this, especially because he's also targeted South Africa at this point, as you were mentioning in the intro, for his disagreements over the land expropriation law here, excuse me. And so it'll be interesting to see what, if anything, we do hear from the U.S. officials who will be coming to these meetings and whether or not President Trump will come to the G20 summit later this year. But still, we're seeing South Africa and a lot of the global South that will be represented continue to press on and look to other partners for some of the needs that they plan to address during the summit.
All right, Bloomberg's Jennifer Zabasajja in Johannesburg. Thank you. And Africa's rocky relationship with the US under President Trump is the topic of the first episode of our new monthly show, Next Africa. And that premieres next week on Friday, February 28, 7:30 p.m. in Johannesburg. And that's 9:30 p.m. for our viewers across the Emirates. Still to come, hear why Bank of Singapore says investors should favour the US dollar and gold if a broader trade war breaks out. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Asian equities fell after Federal Reserve minutes showed caution on interest rate cuts and President Trump calling for more tariffs. Joining us now is Mansoor Mohi-uddin, Chief Economist at the Bank of Singapore. Mansoor, thanks so much for joining us today. I know you say that inflation at the moment is your number one concern right now. I mean, you're not alone. The Fed also wants to sort of sit back, see the impact of the Trump administration's new policies. Can you talk to us about your inflation outlook and whether or not you think there's an outside chance we might get zero cuts this year or maybe even tightening?
Sure, Paul. Thanks very much. Yeah, I do think that inflation really is the biggest concern now for the outlook. Inflation has fallen from double-digit territory in 2022 down towards central bank's 2% targets. But it looks as if it's going to stay stubbornly above 2% for the rest of this year. And then of course, we have all the inflationary policies that the Trump administration is considering: higher tariffs, tighter immigration controls, deregulation, which would support growth but push up prices maybe. And also if we get corporate tax cuts, that could stoke the economy as well. So I'm worried, Paul, that if inflation gets stuck between, say, 2.5% and 3% for both the headline US and core US inflation, then the Fed will struggle to cut interest rates again. We think maybe one more rate cut this year, Paul. But if the inflation numbers continue to be where they are now, then the Fed will have to stop. And so the Fed funds rate will stay above 4% for the rest of this year.
Yeah, and we did see yields slipping a little bit after those minutes were released, particularly the two-year yield. Where do you see bonds heading this year?
Sure, yeah. You can see why yield slipped overnight, because in the FOMC minutes, there's a discussion about reducing or ending the balance sheet runoff, the selling of bonds there. So that's a technical move. But in terms of the underlying fundamentals for the economy, the US economy is still surprisingly firm. We think we will get a soft landing this year. Growth will slow down. But growth has been resilient so far. So we think if inflation does get stuck and the Fed can't cut interest rates anymore, then the markets will start to worry that the next move could be a rate hike. So we think the 10-year yield is likely to go back up to the highs of 2023, which were 5%. That's quite against the market view, which I think is still looking for 10-year yields to fall from here. We think 10-year yields will go up from here.
Yeah, and yields are telling an interesting story in China as well. We've got a really flat yield curve. I think just 24 basis points separating the 1 and the 10-year. It's obviously a bearish sign for the economy. Do you anticipate some intervention from policymakers, and what do you think that might look like if it is coming?
Yeah, it's very interesting, the Chinese bond market. If you think about, say, the 10-year Chinese government bond, the yield on that has been falling relentlessly for the last few years. Now it's at all-time lows. It's a real signal to the authorities that they do need to keep on stimulating the economy further. Now, we did get lots of action from September last year in terms of rate cuts, in terms of efforts to help the property market, in terms of even efforts to put funds into the stock market. But we think next month's National People's Congress is really going to be key. We need to see a much larger increase in the central government's budget deficit. Normally it's around 3%. The market is hoping for an increase to 4 or 5% to give the economy and give consumers and investment a kickstart again. Now, the authorities are waiting really to see what happens with US tariffs, but I do think in March they will have to act. If they can stimulate the economy and bond yields start to rise, that'll be a very important signal that bond investors have begun to turn more optimistic on China's economy, having been very cautious for the last few years.
And I just want to circle back to the inflation story as well, because it's obviously been picking up in Japan. I know you've got your views on how the Bank of Japan's been handling that. Could you share those with us?
Yeah, thanks, Paul. I do think, Paul, that the Bank of Japan are behind the curve. If you look at core inflation, clearly it rose very sharply after the pandemic and the shocks of the war in Ukraine, the Middle East. And core inflation hasn't settled back at the Bank of Japan's 2% target. It's around 2.5% at the moment. Now, we think core inflation will settle above the BOJ's target, just like it may in the US and the Eurozone as well. But in contrast to those other major economies, the Bank of Japan's interest rate is still just at 0.5%. We really think they need to start speeding up the pace of rate hikes. We expect at least 2 more this year to get the core rate up to 1%. The next year they'll have to push it up higher, probably towards at least 1.5%. As the BOJ do that, speeding up rate tightening, that should help the yen. You can see the yen is beginning to strengthen again now. It's coming off the lows that we had from last year.
Just before we let you go, Mansoor, gold is an appealing haven in these uncertain times. We're hovering near the $3,000 mark. How much higher do you see gold heading in the next few days and weeks?
Yeah, gold has done really well for all kinds of reasons, be it geopolitical risks, be it as a hedge against, for example, rising fiscal deficits, inflation risks. I do think gold can go further. You have to remember that we've gone up from about $1,800 an ounce 12 months ago, now to $2,900 an ounce. So we've gone up about 50% over the last year, which is an incredible rally. We had a forecast of 2,900. We've hit that. We think maybe we'll be able to get gold up to $3,100 an ounce. The trend, we think, is still going to be supportive for all the reasons I mentioned, but we think we should be a little bit cautious on how far it can extend, say, for example, in the next few months, given the very strong rally we've had over the last 12 months.
All right, Mansoor Mohi-uddin, Chief Economist at the Bank of Singapore, thanks so much for joining us today. Still to come, Alibaba set up for a key earnings report after an AI-fueled rally added more than $110 billion to its market value. A preview of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Alibaba is due to report earnings on Thursday following a blistering recent rally in its stock. Those moves are putting extra pressure on the numbers later. China correspondent Min Min Lo joins us now. So Min Min, pretty high bar here. What are we expecting?
Yeah, Yes, this is going to be a real acid test for Alibaba of whether that run-up in the stock prices so far year to date, whether that is justified, whether the corporate earnings are able to underpin the optimism that we have seen so far. And some analysts are saying we must brace for a messy fallout if earnings overwhelm, because Alibaba is now big and important enough to the broader indexes here in Hong Kong in a way that maybe an NVIDIA event is to broader US stocks. And so of particular focus is its cloud computing revenue. The consensus forecast there is 9.7% growth in the last quarter compared to 7% in the previous quarter. And the reason this is important is because it gives us an idea of the window, the take-up rate of the AI adoption in China. And of course, there are questions around Alibaba's e-commerce play and whether the market is stabilizing there, especially given the competition from the likes of Douyin, Xiaohongshu. When it comes to the AI ventures, whether Alibaba will be able to fend off rivals like Huawei, Baidu, Tencent, and whether it's able to monetize some of its apps and its investments so far, given that Chinese consumers, like many other consumers, generally aren't that willing to pay for some of these AI features. So a lot of attention on the fundamentals of Alibaba and whether it's able to match up to expectations so far.
Are these some of the reasons that some analysts are saying it might be time to cut exposure to Alibaba?
Yes, I mean, if you look at how much the stock has moved year to date so far, and you think about how year to date really just means about 1.5 months, it's gone up close to about 50%, and that's a very extreme move in a very compressed period of time. So no wonder some traders are worried about whether this stock is overbought, because you look at the multiple, the earnings multiple so far, it's trading at the highest level in 2 years. It's trading at about 13 times forward earnings, when last month it was trading at just under 9 times forward earnings. But granted, it's still some way to go if you look at the 5-year historical average of 15 times forward earning. But again, it's the fact that it ran up so fast in such a short period of time that is causing a little bit of anxiety and worries about whether this trade is a little bit overcrowded at the moment. And options traders are expecting or are pricing in a 6% move, either a gain or a loss in its share prices after that earnings call. That's compared to an average of about 4.8% in the past. So expecting more volatility going forward.
All right, Bloomberg's Min Min Lo, thank you. Let's take a look at some other stories that we're following. Donald Trump's administration is moving to block New York City's congestion pricing program. The Federal Highway Administration plans to withdraw its agreement with the state, which allows tolls on drivers entering some of Manhattan's busiest streets. The city's transport authority has filed a legal challenge to the move. US Defense Secretary Pete Hegseth has ordered senior leaders in the Pentagon to plan for an 8% defense budget cut. According to a memo issued this week, categories exempted include operations at the southern border, nuclear weapons upgrades, and the latest Air Force drone program. The memo calls for targeting excessive bureaucracy and programs linked to climate change and DEI. Let's take a quick look at US equity futures. They're looking a little bit softer at the moment, 0.25% to the downside. European stock futures, though, in modestly positive territory. Still to come, 5 Israeli army reservists facing a court-martial and potentially lengthy jail time over the alleged beating of a Palestinian detainee. That story next. This is Horizons Middle East and Africa. Our top stories this morning. President Trump denounces Ukraine's Volodymyr Zelenskiy as a dictator, saying unless a deal with Russia is reached, he won't have a country left. The yuan gains after President Trump says a new trade deal with China may be possible. And we'll speak exclusively in a moment to Wesfarmers CEO Rob Scott after the Australian conglomerate's first half earnings, which beat analyst estimates. It's just gone 8:30 a.m. across the Emirates. It's 3:30 p.m. here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a quick look at how markets are tracking. We did see yields slipping just a little bit off the back of the Federal Reserve minutes, and we've heard from more Fed speakers today, among them Raphael Bostic saying that he too would like to sit back and wait to see what the impact of the Trump administration's policies could be on the inflation picture. S&P futures currently looking a little bit softer. Bitcoin didn't change a lot, even after we heard President Trump reiterate his now familiar refrain that he wants to make the US the world crypto capital. So still wait and see what that actually means. In the meantime, let's check in on the yen. Avril Hong is in Singapore studio. Avril, the yen's showing a bit of uncharacteristic strength at the moment.
Yeah, it's actually at the strongest level against the greenback since the start of December. Some of this is the other side of the trade. The dollar moves because yields have come down, as you just talked about. The Bloomberg dollar index is also softer after the Fed minutes. Yes, they're talking about rate cut caution, but it also looks like pausing or stalling on QT, or the balance sheet runoff, is raising speculation. Maybe the Fed's going to start engaging in stealth easing, or QE. So that's what's prompting the dollar-yen moves today. But let's look at the Japanese side of the trade, so to speak, because tomorrow we will get those Japan CPI numbers. If the headline comes in at 4%, that would be the highest in 2 years. And it seems like the bets of an early rate hike from the BOJ are coalescing. Dollar-yen's path looks to be lower as well, and getting that further assist from the flattening of the yield curve. Take a look at this chart courtesy of MLive's Mark Cranfield as well. Paul?
All right, Avril Hong in Singapore, thank you. Well, Wesfarmers shares advanced in Sydney after the Australian conglomerate beat analyst estimates. First half revenue coming in at 23.5 billion Australian dollars. Joining us now from Perth is Wesfarmers CEO Rob Scott. Rob, thank you so much for joining us. Of course, much of what happens at Wesfarmers, although not everything, is quite closely linked to consumer spending and sentiment, which has been somewhat weak in Australia as of late. I do wonder, now that we've had that sort of rate cut from the RBA, if you see the health of the consumer improving at all.
Well, Paul, you're right that the last year in Australia has been very tough for the consumer, with significant inflation, cost of living pressures. So to deliver the growth in sales and earnings, and also dividend that we were able to in the first half, was really pleasing in that environment. We have seen one modest rate cut this week of 25 basis points. Frankly, I think it's going to take a bit more to fundamentally change consumer sentiment. We are still facing a number of inflationary challenges. We are seeing some cost pressures continue in areas such as housing. So whilst I think this is a good and promising start, I think we still need to see greater moderation of inflation before we really see consumer confidence kick in.
You mentioned housing there. Of course, one of your best well-known brands is Bunnings, which is a huge home improvement chain here in Australia, for those viewers who aren't familiar with it. But are you seeing much appetite there in terms of home improvement, large renovation projects? And is there any difference between the commercial and the consumer side for that business?
Yeah, so we're seeing quite strong growth on the consumer side of the Bunnings business. That accounts for about 60% of our sales, and that's supported by our range expansion and also many households looking to do more do-it-yourself renovations. The commercial side is still a bit soft. We are growing, but it is soft, and that is partly due to some of the supply side constraints we have in Australian housing. We actually have a very significant demand for housing in Australia, but we still have a number of bottlenecks as it relates to availability of skilled labour, also some of the approval processes which are challenging, and the inflation that we talked about earlier. So, look, we are hopeful that we're going to start to see that kick in through the year. But at the moment, what's holding our sales up and our earnings up is the strong consumer offer at Bunnings.
If we can talk a little bit about your health division as well, I'm wondering if you're planning to open any more pharmacies, expand your network there, grow sales as well, and how are you seeing competition in that space at the moment?
Well, it's a very competitive space, but it's a sector where there are it is a sector where there is stronger consumer tailwinds. There's the health sector, beauty. Affordable beauty is a growing market. So we're pleased with the sales growth that we're achieving. Our business is very much in a turnaround transformation phase. We're investing heavily to improve our retail proposition, our supply chain capabilities, our digital assets. So although we had some promising growth on the consumer side, a lot of that investment that we're making is weighing on returns. But I think over the next 3 to 5 years, we can expect much better performance on the financial side from that division.
Well, as I mentioned for our viewers, Wesfarmers is a very diversified company. You have interests in mining as well. And I want to talk a little bit about what you're doing in the lithium space, because your covalent project is expanding. We are in an environment of a lithium glut, and you're also looking at bringing refining online as well. So can you talk to us about how this fits in with your strategy?
Yes, Paul. Well, look, our approach in lithium is a bit different to what you see from other Australian companies. Australia is very well known for its mining expertise, and we have many lithium miners in Australia. We operate one of the best lithium mines in Australia, Mount Holland, in partnership with SQM. But the real opportunity that we're pursuing is an integrated lithium hydroxide refinery. We are now 64% through the commissioning of that refinery in Western Australia. We're looking forward to producing first product sometime around middle of this year. Then we will see a ramp up of production from there. We remain cautiously optimistic about that, that business. And despite some of the softness in lithium pricing, we are seeing very strong interest in our project from many non-Chinese electric vehicle manufacturers and battery manufacturers.
Well, we do have an election coming up in Australia sometime in the next few weeks. We don't know when it's going to be. I don't want to question you on politics at all, but if you were looking for one policy outcome, regardless of who wins, what policy change would be the most important for your business?
Well, Paul, I think there is a real opportunity in Australia around deregulation. If I reflect on the last decade, we have become a very highly and prescriptively regulated country. I think it has gone a bit too far. It's slowing business down. It's discouraging investment. And whether you speak to a small business or a big business, they talk a lot about that. I think there's never been a more important time for Australia to face into its competitiveness. So that would be at the top of my wish list.
All right, Rob Scott, Wesfarmers CEO, thank you so much for joining us on the day of your earnings announcement. Well, Donald Trump has said it could be possible to reach a fresh trade deal with China, signalling that he's open to heading off a brewing trade fight between Washington and Beijing. The US president did not describe the parameters of a potential deal, and any agreement would face significant obstacles. Trump has ratcheted up pressure on China with an additional 10% tariff on all imports from the country.
It's possible. Well, we did a great trade deal with China. We did it great for the farmers, great for manufacturers. They had to buy $50 billion worth of our product, and we were making them buy it. The problem is that Biden didn't push them to adhere to it.
Well, 5 Israeli army reservists face a court-martial and potentially lengthy jail terms over the alleged beating of a Palestinian detainee at an interrogation centre. Though the first such charges laid since the start of the war in Gaza, the arrests last July angered far-right Israelis, leading to clashes between protesters and military police. Bloomberg's managing editor for the Middle East and Africa, Onur Ant, joins us now. So, Onur, how significant is this?
Morning, Paul. It is quite significant. This is the first time Israel is charging one of its own soldiers since the war in Gaza began. As I said, 5 soldiers or reservists are now being accused of aggravated assault and abuse against a particular Palestinian prisoner that was being held in state time and it's an interrogation center, as I said, where people were captured on October 20. In October 2023 and later during the Israeli offensive in Gaza are being held, and that place has long been accused of having basically intolerable conditions, especially by human rights groups. This is the first time Israel is now trying its own soldiers, its own reservists, for possible abusive behavior in that center with lengthy prison terms, potentially up to 21 years. For the people, for the defendants, if they are found guilty of aggravated assault and abuse.
Well, meantime, more hostages are set to be released over the coming days. How is this helping negotiating an extension to the truce?
We are at a very critical time for a possible extension to the truce. Not only Hamas will release 6 prisoners on Saturday, unlike previous weeks when it was releasing 3 at a time, it is also signaling that A, it can release all the remaining hostages all at once, and B, it doesn't have to partake in politics in Gaza following a permanent peace to the war there, should Israel withdraw all its forces from Gaza. Now, it shows that as we near the end of the first phase of the ceasefire, Hamas is trying to signal that it's ready to move on negotiations for the second phase where it can make some concessions. Now, the problem is the conditions that are being set by Hamas, while it seems to be making concessions, are still somewhat unacceptable to Israel, because while Hamas says it can stay out of politics, it wants to remain as an armed group, and that's not something that Israel seems to be willing or capable of living with, because of fear that such a group, such an armed group, outside of formal politics, can turn into a new Hezbollah, for instance, like armed group in Lebanon, a similar situation.
All right, Ono Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you. Still to come, a controversial hike in VAT derails the South African budget after coalition members reject the plan. We'll have the latest from Cape Town next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen in Sydney. South Africa's budget has been delayed after a shock consumption tax increase was rejected by other parties in the government. Budget documents proposing a 2% hike in VAT were withdrawn pending a review after the second biggest party in the coalition said that they hadn't been properly consulted. Let's speak now to Bloomberg's Ntando Tukwana, who joins us from Cape Town. So, Ntando, how exactly did the postponement of the budget come about, and what does it say about South Africa's public finances?
Morning, Paul. It was a very unprecedented move. This has never happened before in the history of South Africa, but the government's proposing a 2% increase in the value-added tax on goods and services, and it was going to push it up to 17%. They said that it would have helped them to generate about 190 billion rand in revenue, and they were going to use that to pay for public sector wages and help them, sort of limit their borrowing. But it first appeared that the biggest or the second largest party in the coalition was opposing the tax. But in a press briefing later yesterday, the finance minister actually said that many other political parties were actually opposing this increase. And he said they had to consider raising this tax because they found themselves in an unavoidable situation because they can't continue to borrow for consumption needs, and they couldn't consider cutting expenditure amid the many rising spending needs.
So what were some of the other measures proposed in the budget?
Aside from the VAT increase, there was also an additional allocation of 46 billion rand for infrastructure projects. Now, the Government of National Unity has pitched itself or has pledged faster economic growth and accelerating structural reforms in the energy sector, in the water sector, and also in the logistics sector. So that allocation was going to help ramp up those efforts. There was also a 5 billion rand allocation over the medium term for peacekeeping missions, which South African troops are involved in the DRC. We know that about over a dozen of South African troops were killed in those missions earlier this year. There was also improvements on the debt front. They are seeing that in the medium term, the debt ratios will see some improvements. So those are some of the factors or some of the other highlights that came out of the budget yesterday.
All right, Bloomberg's Ntando Tukwana in Cape Town. Thank you. Let's take a look now at some of the other stories that we're following. Barrick Gold shares surged to their highest since November after a news report that the Canadian company had settled a dispute involving its vast mining complex in Mali. Reuters reports that Barrack signed a new agreement with Mali's government to end an almost two-year-old dispute over its mining assets in the West African country. Dubai is planning to build a solar plant with battery storage for uninterrupted power supply just a month after Abu Dhabi unveiled a similar $6 billion project. Dubai Electricity and Water Authority says the seventh phase of its solar park will integrate 1.6 gigawatts of photovoltaic capacity with 1 gigawatt of battery storage to deliver around-the-clock energy. The UAE is the first Gulf state to have declared a 2050 net zero target. Iran state-run news agency says the country has told Qatar it should release oil revenues held in Doha in defiance of US pressure not to do so. Iran's supreme leader made the request at a meeting with the ruler of Qatar, who's visiting Tehran. He referred specifically to South Korean payments made for Iranian oil made several years ago, which are frozen in Seoul bank accounts after President Trump's first administration tightened sanctions on Tehran. China plans to ban private companies from mining rare earths, further tightening its grip on the strategic sector in its trade war with the US. Beijing's draft rules propose only large state-owned groups can mine, smelt or separate the minerals. Rare earths are used in everything from wind turbines to EVs and have been a key part of China's past trade disputes. Coming up, UN officials warn the rapid advance of Rwanda-backed rebels in Congo threatens regional peace. We'll have the latest from the East African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. After taking two key cities, the M23 armed rebel group is advancing on strategic zones in the Eastern Democratic Republic of Congo. That's according to reports. The United Nations has warned the recent rapid progression of the Rwanda-backed rebels underscores the threat of a regional conflict. For more, Bloomberg's Ondera Oganga joins us from Kigali in Rwanda. So, Ondera, what's the latest from the UN Security Council over the continued offence by M23?
Hi, Paul. So you're seeing growing calls at the UN Security Council to take action in order to avert a regional war. You have the UN Special Envoy to the Great Lakes region saying that several things are unclear. The agenda of M23, the intention of their backers, how far they're willing to go and why. And you also have DRC's foreign minister saying that the Security Council observes, it condemns, but doesn't act. Yet the UN is the one body that has the power to avert any new massacres. But then again, on the other hand, we're beginning to see countries seriously consider taking action against Rwanda, and the US is saying that they're willing to work with the Security Council on a sanctions package against the country, with the US interim charge d'affaires, the UN, saying that M23 have ignored ceasefires, they've conquered new territory under false pretext, and they continue to deny expansion ambitions, yet every single time they ignite new fighting. The UK is also saying that they're considering reviewing all of their aid to Rwanda, and while international pressure is mounting, M23 is continuing with its offense. It's drawing closer and closer to the border with Burundi. Tension between the two countries is rising, and Burundi says that no one can predict the security, humanitarian, and economic consequences of this war. Be that as it may, one might ask, what is emboldening this war and also Rwanda? Is it because they're protecting the $20 billion Total project in Mozambique? Is it because of Russia and Israel? Is it because there's lack of a big brother to be able to moderate peace and stability globally? But as pressure continues to mount and the finger of blame points at them, they continue to deny allegations of backing M23 rebels.
Can you tell us a bit more about the unfolding economic implications for Rwanda over the war in the eastern DRC?
Paul, so we've seen Rwanda's dollar bond slump to the lowest in more than a year. The $620 million bond fell by 2.7% on Tuesday, which is the biggest drop in 3 years, and then slid further by 1.3% on Wednesday to trade at 79.3 cents to the dollar. And experts say that they're expecting more tangible negative effects. Tourism receipts could take a hit because of Rwanda's small mass and also its proximity to the conflict. And if sanctions are to come into play, Rwanda could be locked out of the international financial markets, and this will not only affect their fiscal but also debt sustainability.
All right, Bloomberg's Ondero Ogonga in Kigali, Rwanda. Thank you for joining us. Let's get to some of the other top stories that we're following. Prada is evaluating the Versace brand as it weighs a bid for the Italian fashion company. Bloomberg's learned that Prada kicked off a full review after gaining access to Versace's financials and sales figures. Versace reported an operating loss of $21 million this year and a 15% year-on-year decline in revenue for the third quarter. Elon Musk's close ties with President Trump are also helping draw investors to his companies. Bloomberg's calculations show that Musk's businesses have gained $613 billion in value since the presidential election. At the same time, his personal fortune has jumped more than 50% to almost $400 billion. X in particular shows a stunning turnaround. Now in talks to raise cash at a $44 billion valuation. And that's the price Musk bought it for 2 years ago. Donald Trump's administration is moving to block New York City's congestion pricing program. The Federal Highway Administration plans to withdraw its agreement with the state, which allows tolls on drivers entering some of Manhattan's busiest streets. The city's transport authority has filed a legal challenge to the move. All right, let's take a look at how futures are tracking ahead of the open in the US. We've got a little bit of weakness for S&P futures there, NASDAQ futures as well. As we look ahead to the open in Europe, though, a little bit of a risk on sentiment coming in there as well. We did see yields slipping back just a little bit on the release of the Fed minutes, and we've heard from more Fed speakers as well. Among them, Raphael Bostic, he's been echoing his support for a pause from the Fed until the impact of Trump policies become clear. We've got the oil price steadying as well. It's been holding its gains on a report showing a potential build-up in US crude stockpiles, production and export disruption in Kazakhstan and Russia clouding the supply side. Still to come in the next hour, MBMG Group co-founding and managing partner Paul Gambles is going to join us with his market outlook. I'm Paul Allen in Sydney. Jennifer Zabasaja joins us next from Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. President Trump denounces Ukraine's Volodymyr Zelenskiy as a dictator, saying unless a deal with Russia is reached, he won't have a country left. And Israel charges troops over a prisoner abuse incident which divided the country, the first such case since the start of the war in Gaza. Also, the world's foreign ministers converge on Johannesburg for the first of South Africa's G20 meetings. But while the new U.S. administration will be a hot topic of conversation, Secretary of State Marco Rubio is skipping the event. Good morning. It's just gone 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasaja. Welcome to the second hour of Horizons Middle East and Africa. And a busy day here in South Africa with the start of the G20 meetings. But still, very close attention is being paid to discussions and tensions between the U.S. and Ukraine. And also for the markets, focus on the Fed minutes that we got on Wednesday, as well as Alibaba earnings that we'll get later today. But let's just take a look at where your markets are positioned ahead of the trading day. If you take a look at U.S. equity futures, trading in the red right now, S&P futures down just about 0.3%. We're seeing a bit of a risk-off sentiment taking hold amid more of these geopolitical tensions and uncertainty again around trade tariffs. Although you might not have thought that when you took a look at how the S&P closed on Wednesday, still closing and trading near an all-time high. The U.S. 10-year yield currently down, pairing some of the gains that we saw earlier in the week. As I mentioned, we did get those Fed minutes, and a note of caution from most of the Fed officials is what we interpreted. Not only the risks around inflation and inflation being stubborn, but also potentially the debt ceiling and concerns around there. The MSCI Emerging Markets Index, the gauge of EM equities, down more than 0.5%. We're talking about this risk-off sentiment setting in. A lot of this is, again, around geopolitical tensions, but also China tech. So emerging market equities taking a pause from a 5-day rally that we've seen. And Brent crude down just about 0.4% there to trade at about $75.73 a barrel. We've seen oil over the past few days actually increasing, but now there is a focus on crude stockpiles, not only in the U.S., but adding to the discussions and the potential delayed increases that we may get from OPEC+. And I also want to bring your attention to this chart. I mentioned China tech. Later today, we will get earnings from Alibaba, and it really will be a key test for the company in particular. We did see the company actually getting a $100 billion rally after the DeepSeek situation earlier this year. And so the focus will be on the outlook for the company. As this chart is showing, though, Alibaba sales have slowed significantly since 2022, but analysts are estimating that potentially we will see sales rise 6.5% in the 3 months through December of 2024. So focus will be on that when the markets close later today. Let's check in on how markets in Asia are faring, though, and stick on this topic. Avril Hong is in our Singapore studio. Avril, a lot of red on the board there where you are.
Asia stocks are lower, Jen, and this is no thanks to some of these geopolitical tensions between the U.S. and Ukraine, tariff threats. We had the Fed minutes as well. But of course, the key test for the Hong Kong gauge is going to be those Alibaba earnings, as you alluded to. This is a stock that's run up 60% since its January lows, and it's been a key beneficiary of the DeepSeek AI rally. It's no wonder that it is looking quite cautious on Alibaba today. We're going to be paying attention as well to its cloud revenue, but also moving dollar-yen fast approaching the 150 level. And this is against the backdrop of a chat between Ueda and Ishiba. This is a regular meeting that they have, but the BOJ's governor, interestingly, said that they did not discuss rising yields. So it sounds like a green light for another BOJ rate hike. We're seeing yields higher in Japan, the yen strengthening today. Jen?
Thanks so much. Avril Hong in Singapore. We'll check back in with you in just a bit. Let's turn back to the U.S. President Trump has stepped up his attacks on Ukraine's leader after earlier labeling Volodymyr Zelenskiy a dictator who won't have a country left unless he moves fast on a deal with Russia.
I love Ukraine, but Zelensky has done a terrible job. His country is shattered, and millions of people have unnecessarily died. And you can't bring a war to an end if you don't talk to both sides. You got to talk. They haven't been talking for 3 years. So we hope to see a ceasefire soon and to reestablish stability in Europe and the Middle East.
Trump was speaking there at a Saudi-run investment summit in Miami. For more, let's bring in Bloomberg's John Harney. John, who's been paying close attention to this. John, what does this mean for negotiations to conclude the conflict between Ukraine and Russia?
Well, it certainly presents a dire, stark dilemma for Volodymyr Zelenskiy, because in a stunning reversal, a reliable and powerful ally in the United States, that is, which not only provided vast quantities of arms and other assistance, but forged an alliance of other democracies to resist the Russian invasion, has suddenly turned against the Zelensky government. So it weakens Zelensky's hand in negotiations, but this seismic shift in position has reverberated, in capitals from Moscow, of course, into European capitals, and the Europeans were, of course, quite miffed that they were not included in these negotiations in Saudi Arabia. But also on Capitol Hill, you found criticism or misgivings among supporters of Donald Trump, who are also have been steadfast supporters of Ukraine in a war that is about to enter its fourth year.
So then, Jarny, I mean, where does this go from here? We've heard that the summit between Trump and Putin has been pushed back, but it's likely to happen. And whether or not Zelensky will be involved in that is sort of the wild card here. So what is the next step here?
Well, the negotiations have just begun, it remains to be seen, like what is going to be demanded of Ukraine, what is going to be asked of other powers. Would they be involved? Much has to be, but there's much that remains up in the air at this point, and of course there's still. The combat is still continuing in Ukraine. People are still fighting and dying on both sides. Ukraine even still holds a part of Russia.
Right. We have a lot to pay attention to. Bloomberg's John Harney there in Washington staying up late for us. John, thank you so much for joining us. Let's turn to the Middle East. 5 Israeli army reservists face a court-martial and potentially lengthy jail terms over the alleged beating of a Palestinian detainee at an interrogation center. They're the first such charges laid since the start of the war in Gaza. The arrests last July angered far-right Israelis, leading to clashes between protesters and military police. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams, who's been following this story closely. Dan, let's just start with the hostages being returned today. As Benjamin Netanyahu has called it, it is a big day, potentially a sad day. More are set to be coming, though, in the next few days. Talk to us about the situation.
Well, good morning. This really has the makings of a day of national trauma, and there's been no lack of national traumas over the last 16 months of war. But today would see the return of 4 bodies, 4 dead hostages from the Gaza Strip. That's the first such recovery of dead hostages as part of negotiations with Hamas. What makes it even more fraught is the fact that 3 of these bodies are, we're told, the Bibas family. This is really one of the most abiding images from the October 7th, 2023 attacks, which sparked this war. A woman, Shiri Bibas, and her 2 young sons, one a baby, one a toddler, being taken into captivity, separated from the father of the family who survived and has now been returned to Israel. So it has now been confirmed, apparently, that the 3 did not survive captivity. They were killed in Gaza, and they will be returned. And even the health ministry of Israel has been advising citizens to reduce their exposure to social media, to news coverage, given that this might awaken traumas from those days. So we're expecting quite an emotionally fraught day for Israelis well into this war.
And Dan, you've also been paying very close attention to the story we mentioned in the intro. You actually have a story out right now talking specifically about the charges against these 5 army reservists that resulted in protests. How significant is this for the current conflict?
Well, through this war, there have been dozens of investigations opened by the military for misconduct or alleged misconduct by troops, at least 1 indictment. What makes this unique is it's a group indictment. 5 soldiers accused of abusing a Palestinian detainee in a desert stockade where suspects in the October 7th attacks or prisoners of war have been interrogated. There was also an element, a suspicion of sexual abuse that really made the rounds on social media at the time, given the nature of the injuries of this victim. What's interesting here is that indictments have now been filed against these 5 serious charges of abuse, of assault, with a maximum penalty of 21 years in jail if convicted. However, no rape charges, no sexual abuse charges, which the defendants, or at least the defense counsel, have pointed out as evidence that they say their clients were smeared in the public square. This did divide Israeli opinion because at the time, even members of Netanyahu's government, far-right members, said that the energy that the military prosecution and police were placing on this case was misplaced. There's very little sympathy among Israelis for Hamas, and many of these detainees at this stockade are assumed or believed or proven to have been members of Hamas who carried out that attack. So again, this has really touched a nerve, and now we will see, especially as this court-martial proceeds with a possible conviction, whether those feelings will be aroused once more.
Yeah, and we'll wait to see how the rest of the day plays out there with the return of those bodies. Bloomberg's Dan Williams in Jerusalem. Thanks so much, Dan, for your reporting and for joining us. Still ahead, hear why MBMG Group says it's time to be fearful, not greedy. Co-founder and managing partner Paul Gamblis shares their market strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Asian equities fell after Federal Reserve minutes showed caution on interest rate cuts and President Trump called for more tariffs. Joining us is Paul Gamblis, co-founder and managing partner of MBMG Group. Paul, great to have you on. As we just mentioned there, we're seeing a bit of risk off after we got another announcement from President Trump, as well as those Fed minutes. Let's just start with the Fed. Do you think they are right to express and feel a bit of caution at this point in time?
Hey, look, good morning, Jennifer. So I think everybody needs to feel a bit of caution at this time. The question is, how you go and manifest that. And, as you say, it's sort of everybody's running from, the right-hand side of the ship to the left-hand side of the ship on a daily basis because, risk is on, risk is off, and all based on the sort of, random pronouncements that are coming out of the, Trump 2.0 administration. So in one sense, you have to feel a little bit of sympathy for policymakers because they're caught up in all of that as well. But, they should be the adults in the room here. They should be the professionals who are looking at this and, trying to work out a plot to steer regardless of the various pronouncements. And I think the Fed are getting just as caught up in this as everybody else. And, it's partly their fault. They've become so data dependent, and data is now, so Trump dependent that it's become a really kind of, vicious, self-fulfilling spiral. So on one level, you feel sympathy for them. On another level, you kind of want to grab them and shake them and say, well, let's actually look at some of the fundamentals, because there are some real problems right now in the global economy and in the American economy. Mm.
When you think about your clients and you talk to your clients, what are some of the pain points here that you're finding just in terms of managing a lot of this uncertainty in your portfolios?
Yeah, that's a great question. So, the obvious place where there's value right now emerging is in the bond market. But we started saying that a year ago, and that has been a pain point for the last year. So, we've been gradually increasing the exposure to bonds and gradually increasing the duration and also increasing the beta. So far, that's been a really difficult trade for us. I mean, luckily we've more than outweighed that on the rest of the portfolio. But if you're trying to be balanced and if you're trying to look for value right now, it's a really difficult time. You've paid a little bit of an entry price for doing that so far, but presumably there's a payoff for that to come, and that's why we're sort of looking at trying to increase the impact of the exposure without necessarily increasing the exposure. The good thing is, interest rates at these levels and option pricing at these levels allows for some creativity. You can actually, we've been really opposed to structured products, for instance, for a long period of time. But writing structures at these interest rates on long-term treasuries actually makes a huge amount of sense now because of the option pricing. So there are opportunities here to go and exploit this without taking risk. And I think everybody's just got to kind of try and hang on to their own compass and see what does make sense and what doesn't, ignore the short-term froth. December and January were kind of completely diametrically opposed months. One was horrible for balanced portfolios, the other was great, and we're going to get that. We're going to get volatility for sure. So we've got to live through it.
Mm. Well, Paul, let's just talk about what could be the next catalyst, and that's Alibaba earnings coming later today. When we talk about equities and your exposure, at least to Asian equities, are you confident in the investment that you've made there, or do you look to the U.S. where we're seeing the S&P continuing to hit record after record?
So we're really not confident about, US equities at all. And therefore, all the exposures that we've got now are pretty much protected one way or another. It's been a great time, and it seems like the right strategy to have long-short exposure, people like Steve Cohen in the portfolio. It's a great time, I think, now to have, protection in the portfolio as well through futures contracts or through optionality. And it's a great time to be aware of the fact that the AI bubble is kind of facing, what we call the NVIDIA fork, which is that if AI disappoints generally, well, NVIDIA is due to have one of its periodic sort of 60 to 90% crashes. And if AI thrives, well, NVIDIA isn't going to maintain the dominant position, so it's due to have one of its periodic 60 to 90% crashes. And the problem with that is, in the past, NVIDIA wasn't systemic. Now, as goes NVIDIA, so goes the US equity market. So you've got to be really careful, because it's very difficult to see, in the longer term, an operating window where NVIDIA can thrive and where US equities can thrive. So that's kind of pushing us, I think, to look for more value in Asia.
Right. I didn't even get to talk to you about the yen and FX, but hopefully next time. Paul Gambles, co-founder and managing partner of MBMG Group. Thanks so much, Paul, for joining us. Great to have your insights on. Now, coming up, Australia's central bank deputy governor expresses caution about the prospects for follow-up rate cuts. More on the country's monetary path and risks to the economy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapisacha in Johannesburg. The Deputy Governor of Australia's central bank says policymakers are still rigorously focused on inflation, although no single piece of data can trigger a rate move. Andrew Hauser spoke to us after this week's rate cut, the first in 4 years, for more on the RBA's thinking about price pressures.
There's been a great deal of positive news about inflation in Australia. Just to remind you, and you know this, we adopted a somewhat different strategy to tackling the inflation spike in Australia to other countries. We raised interest rates to a level we thought that were restrictive, but we didn't raise them to the sorts of levels that other central banks had done, precisely because we wanted to protect the gains in the labour market. And as I think you've been talking about earlier, labour data out today show that the labour market in Australia has been incredibly strong, but inflation has also come down as well. What we said in December is that we would form a view about whether we become sufficiently confident that inflation would come sustainably back to target, to the midpoint of the target, 2.5, to begin easing. We did reach that position of sufficient confidence, but this is not a done deal yet. The underlying rate of inflation is still 3.2%, which is slightly above the band. The headline rate of inflation is in the band. And so although we've removed some of the restrictiveness that we had in policy, there is still restrictiveness in the system, and we still need to see a bit more good news on inflation coming back to that midpoint.
And the jobs data was quite nuanced, right? Because even though unemployment ticked up, even though we saw more jobs than expected full-time being added, participation is still really high. The wages data this week showed, further slowing. Does that tell you that some of that robustness might start to fade in the coming months?
Which bit of it shows you that it might fade?
That we're starting to see the signs of perhaps a little bit more vulnerability in the labour market. And of course, Australia's not the only one that's kind of dealing with that scenario.
It's quite hard to see bad news in the latest employment data. They remain very strong. I think the debate about the labour market is a slightly different one, which is, although we know employment has been growing strongly, inflation has been coming down. And as you say, wage inflation has been coming down too. And so there's a very lively debate about whether that employment growth leaves us with less capacity in the labour market or a bit more. If there is a bit more, then inflation will come down more quickly than we're predicting, and that'll be good news because it would mean that we can adjust policy more rapidly. But we need to see more information on that, I think, before we can be sure.
What do you see as the biggest risks facing the economy?
Anyone who tells you they know how this is all going to shake down in the long run is wrong, right? We're all learning. Things are moving very quickly. I think one of the important points I'd say is actually that very uncertainty about trade policy and about outcomes in general, globally, not exclusively in Australia, may itself have an effect on activity in Australia. So if you're a firm or if you're a household planning to make an expenditure that in some way depends on a certain outcome in the global economy, and you know that who knows what's going to happen in the next period, you might just wait. Now, waiting is very sensible for an individual, but it could be really bad news for the economy. So I think for me personally, one of the factors in the decision this week was actually a sense that, look, maybe that pervasive uncertainty itself may have some short-term depressing effect on activity.
RBA Deputy Governor Andrew Hauser speaking to Bloomberg's Heidi Stroud-Watts there. Let's just take a quick check at where your markets are positioned ahead of the trading day. Investors focusing in on the Fed minutes that we did get on Wednesday, again, confirming a bit of caution amid stubborn inflation in the U.S. and a lot of uncertainty around policy. But we're also seeing geopolitical tensions be a focus for investors right now. Futures trading downside, trading in the red right now, but Eurostock 50 futures looking potentially like a strong start to the day later today. Now, we are focused very closely on Alibaba earnings that will come later after the bell to, again, test whether or not that AI rally that we saw earlier this year continues to take hold. Now, coming up, South Africa hosts the first G20 Foreign Ministers Summit since Donald Trump returned to office. More on that in just a bit. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. President Trump denounces Ukraine's Volodymyr Zelenskiy as a dictator, saying unless a deal with Russia is reached, he won't have a country left. The yuan gains after President Trump says a new trade deal with China may be possible. And the world's foreign ministers converge on Johannesburg for the first of South Africa's G20 meetings. But while the new U.S. administration will be a hot topic of conversation, Secretary of State Marco Rubio is skipping the event. It's just gone 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to Horizons Middle East and Africa, the second hour, the second half of the second hour. Let's just take a look at where your markets are positioned ahead of the trading day. A bit of a risk-off day potentially is setting in amid those heightened tensions between the U.S. and Ukraine. There still is some uncertainty around those tariffs, although we did get some news overnight from President Trump. And investors deciphering or trying to interpret the Fed minutes that we got on Wednesday, noting that potentially they will stay higher for longer amid stubborn inflation and also concerns around the debt ceiling in the U.S. But right now, S&P futures trading down just about 0.3%. We're also seeing U.S. 10-year yield currently down, pairing some of those gains that we saw earlier in the week again as investors interpret the Fed minutes. The risk-off sentiment setting in for emerging markets, and in particular, if you take a look at the index that tracks emerging market equities, down just about 0.4%, taking a pause in the 5-day rally that we did see, and a lot of that is amid those geopolitical tensions. And again, China tech, potentially a bit of profit-taking ahead of the Alibaba earnings that we'll get later today. Brent crude also down just about 0.2% to trade at about $75.84 a barrel, with a focus now on crude stockpiles, adding in addition to some of the questions around OPEC Plus and those delayed increases that we could potentially get. And a quick check at those Alibaba earnings coming later in today. It could be the next test for this tech-fueled rally that we saw earlier this week. We're going to be focused on the company's presentation, but then also the outlook. And as this chart shows, Alibaba sales have slowed significantly since 2022. So the question will be whether or not the DeepSeek rally that the company got earlier this year will continue to fuel the company moving forward. But let's bring in Avril Hong, who is actually taking a closer look at Alibaba. She's standing by in Singapore. Avril, what are you watching?
Well, I just wanted to show you how hot the stock of Alibaba's has been this year. I mean, you look at, since the start of the year, 50% higher. If you count from the January lows, it's actually run up 60%. Then you look at the RSI, it's not just above 70, it's above 80 levels. So extremely overbought, well above these analyst price targets for 12 months. And even the fear greed index or gauge is showing how the bulls are firmly in control. Perhaps unsurprising, we're seeing the stock on the back foot today, given how far it's come. But flip the board, I also wanted to talk to you about what we're seeing in the extent in which this could influence the broader markets. This chart, courtesy of MLive's Mark Cranfield, to show you how closely the Hang Seng's been tracking the rally in Alibaba so far this year. And Alibaba's earnings have kind of going to be to the Hong Kong markets what Nvidia is to the US. And options traders are expecting bigger than usual moves. So if these earnings underwhelm, things could get missed.
South Africa is hosting the first G20 Foreign Ministers Summit since President Trump returned to office. However, Secretary of State Marco Rubio will not be in Johannesburg, citing an agenda that includes, as he put it, quote, global warming and DEI. Speaking ahead of the event, Kaja Kallas, the European Union's foreign affairs chief, said multilateralism is under threat.
You can count on European Union's full support to South Africa's leadership and ambitious G20 agenda. I'm also convinced that both South Africa as well as European Union not only have an interest of working closely together, but will equally benefit from each other.
For more, let's go to Bloomberg's Anthony Squizine. Anthony, how much of a blow is the U.S.'s snub? In addition to Rubio not coming this week, there are reports that Scott Bessent won't be coming next week for the finance ministers meeting. What does this mean for South Africa?
I think it's a huge blow. The G20 is the gathering of the world's biggest economies, and the U.S. is the biggest economy. So it does mean that whatever is achieved, if it's without the U.S., will be less meaningful. So it puts South Africa in a difficult position. But on the other hand, South Africa has drawn strong support from the EU, which is collectively the country's biggest trading partner and also the biggest investor. And it gives the opportunity to South Africa to push forward with this agenda to try and wean the world's global financial institutions off their dependence on the West and make them more amenable to what they term here as a global south, so China, India, and smaller countries like South Africa.
So, Anthony, without the inclusion, at least, of the two leaders in the U.S., Marco Rubio and potentially Scott Bessent, does that change the agenda for South Africa? Or, as you say, with the EU and others still coming, could they still achieve some progress?
I don't think it changes the agenda. I think South Africa will be doubling down. Solving inequality, dealing with the problems of the so-called global south, such as African debt, is important to South Africa. So I'm pretty sure that that's what they'll be focusing on. I think they can achieve a few things, but obviously without the world's biggest economy, it's going to be limited. And it does make the whole hosting of the G20 a little bit more of an honor for South Africa. It's going to be a difficult year.
So then what's the focus then, Anthony, for you? You'll be heading down to the convention center. What are you focused on getting?
Well, I think what we should look at is both the South Africans and Kaja Kallas yesterday said that multilateralism was under threat. And I think there'll be a bit of a show of solidarity. South Africa's relations with the EU have, in the last few years, been tested a little bit by South Africa's ambiguous approach to Russia's attack on Ukraine. And it's been quite difficult. But suddenly there seems to be a rapprochement, and old friends seem to be finding each other in a time when they're all under a bit of attack from the new Trump administration.
Right, of course, and that will be key in there. Anthony, we were just taking a look at some of the other officials that will be potentially on the ground here. When we think about at least the South Africa's relationship moving forward with some of these other countries, where would you say is the most important for South Africa to walk away with maybe a strengthened bilateral relationship?
I think what would be important for South Africa, and we've seen this already given that there's an EU-South Africa summit next month, which has been long delayed. South Africa's biggest trading partner is the EU, just a little bit ahead of China, and by far the biggest investor in the country in terms of actual companies and factories. So I think if there's a rapprochement and South Africa can rebuild and improve its relationship with the EU, that would be a major achievement for the country. At the same time, it's keen to build ties with China and India, and I think they'll be pushing that quite hard as well.
Of course, especially as members of the BRICS bloc. Bloomberg's Anthony Squizine. Anthony, thanks so much for joining us. And Africa's rocky relationship with the U.S. under President Trump is the topic of the first episode of our new monthly show, Next Africa. That premieres next week on Friday, February 28th at 7:30 p.m. in Johannesburg, 9:30 p.m. for our viewers across the Emirates. Be sure to tune in. Now, Donald Trump has said it could be possible to reach a fresh trade deal with China, signaling he's open to heating off a brewing trade fight between Washington and Beijing. The U.S. president did not describe the parameters of a potential deal, and any agreement would face significant obstacles. Trump has ratcheted up pressure on China with additional 10% tariffs on all imports from the country.
It's possible. Well, we did a great trade deal with China. We did it great for the farmers, great for manufacturers. They had to buy $50 billion worth of our product, and we were making them buy it. The problem is that Biden didn't push them to adhere to it.
Now, President Trump's tariffs only make goods more expensive for Americans. That's according to Canada's Trade Minister, Mary Ng. Speaking to Bloomberg, Ng reiterated a vow to retaliate if the country's largest trading partner goes forward with import duties.
We've been very clear. Tariffs are expensive for America. They make no sense. When 70% of what I export into the United States takes, adds value to it, and then helps them be more competitive with their products. Adding a tariff just simply makes it more expensive for Americans. Adding tariffs to Canadian exports simply means that it's going to cost Americans more at the grocery store. It's going to cost Americans more at the pumps. So it makes no sense. We will continue to reiterate that message. We've been very clear. We will not. We don't want to be here. We don't want to initiate anything. But should there be punishing tariffs on Canadian and on Canada, we will respond accordingly. But in the meantime, we are having conversations with the Americans, as we do. When you have a trading partner like the one between Canada and the United States, where Canada, it's our largest trading partner, but we're pretty important to the Americans as well. When I count 36 American states as my top customers, I sell more to them, to those 36 states, than China, than Japan, than the United Kingdom and France combined. So we need to work on this together.
That 30-day pause, you're in talks right now. How confident are you that can be extended, that will be extended?
We are working very hard on that, myself, the Prime Minister, my cabinet colleagues. This is a really intentional effort to work with the administration. One of the things that the American administration, including the president, have raised concerns about is how we can collaborate and do more on border to make sure that at the border we are indeed working more together. Despite Canada only having less than 1% of fentanyl going into America, it too is just as a concern for Canadians. So collaborating together to make sure that we are doing more on our border is what we are doing. And we're confident that that work is not only making progress, but that we're doing that with the Americans. And this is the testament of the Canadian-American relationship as well. The ability to talk through and work through what are sometimes really tough issues. So we're committed to doing that on our end.
Canadian Minister of Export Promotion, International Trade and Economic Development, Mary Ng, there speaking with Haslinda Amin. Now, coming up, UN officials warn the rapid advance of Rwanda-backed rebels in Congo threatens regional peace. We'll have the latest from the East African nation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. The UN says Rwanda-backed rebels in eastern DR Congo have advanced southward, reaching Burundi's border, bringing the Central African region to the brink of war. For more, Bloomberg's Ndiro Oganga is joining us now from Kigali, Rwanda. She's been following the situation. Ndiro, what is the latest from the UN Security Council over this continued offense from the M23?
Hi, Jen. So there are growing calls for the UN to take action to avert a regional war. The UN Special Envoy to the Great Lake region says several things are unclear. The agenda of M23, the intention of their backers, how far they're willing to go, and why. You also have DRC's foreign minister who was saying that the council observes, it condemns, but it doesn't act. Here, the UN is the one body that has the power to prevent new massacres. On the other hand, we could be drawing closer to consequences. The US rather says that they're willing to work with the Security Council to draw up a sanctions package against Rwanda. And you have the U.S. interim chargé d'affaires at the UN saying that M23 have ignored ceasefires and they've also conquered new territory under false pretext. You also have the UK that are saying they're considering reviewing all of their aid to Rwanda. The UK summoned the Rwandan High Commissioner saying that Rwanda needs to cease all of the hostilities in the eastern part of DRC. Allegations that Rwanda denies, saying that they've only maintained a defensive posture against the security threat that the country continues to face. Be that as it may, M23 is continuing with the offense, edging closer to Burundi. And Burundi now says that if this is to escalate into fighting, the humanitarian, security and economic consequences are unpredictable.
Well, and Ndiro, you talk about the consequences of this. We're seeing a bit of that unfold. But are we getting a sense of really the economic implications for this continuing?
It's beginning to unfold, Jen. Rwanda's dollar bond slumped to the lowest in over a year. The $620 million bond notes fell by 2.7% on Tuesday and also slipped further to trade at 79.3 cents, having slipped 1.3% on Wednesday. Experts are also saying that more tangible negative effects could be looming from tourism receipts taking a hit because of Rwanda's small landmass and also its proximity to the conflict in DRC. And also, if the sanctions kick in, then Rwanda is likely to be locked out of the international financial market, and this will have repercussions on their fiscal and their debt sustainability.
Thanks so much. Bloomberg's Ndiro Oganga in Kigali, following the story there in eastern DRC for us. Thanks so much. Now for a look at some of the other stories in the region that we are following this morning. Barrick Gold shares surged to their highest since November after a news report that the Canadian company had settled a dispute involving its vast mining complex in Mali. Reuters reports that Barrick signed a new agreement with Mali's government to end an almost two-year-old dispute over its mining assets in the West African country. Also, Dubai is planning to build a solar plant with battery storage for uninterrupted power supply just a month after Abu Dhabi unveiled a similar $6 billion project. Dubai Electricity and Water Authority says the seventh phase of its solar park will integrate 1.6 gigawatts of voltaic capacity with 1 gigawatt of battery storage to deliver round-the-clock energy. The UAE is the first Gulf state to have declared a 2050 net zero target. Now, coming up, Apple has debuted a new low-end iPhone in an effort to revive growth after a sluggish holiday season. Details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Apple is rolling out a new low-end smartphone called the iPhone 16e as it aims to revive growth after a sluggish holiday season.
Today, we're excited to complete the iPhone 16 family with a new model that features the performance, intelligence, and privacy you expect.
The phone also debuts Apple's in-house cellular modem chip that replaces a key component from Qualcomm. For more, let's bring in Bloomberg's Asia Tech reporter, Annabelle Drulers. Annabelle, talk to us about more from what we heard from Tim Cook.
Yeah, well, it's actually quite a significant new offering that's coming into the Apple iPhone lineup here, because this is a rebranded device. It's going to be going on sale at the end of this month, so just in another week or so from now. It's going to be replacing the iPhone SE. So this is the first big iteration we've seen to this device in about 3 years. What's significant is that this price, or this product, the 16e, has a lot of the same different features that you see in the iPhone 16 lineup. So lots of positives here. It's got a 48 megapixel camera. It's got the same A18 chip as the iPhone 16. It's got a USB-C charging port, for instance. That gives it entry back into the European market. It runs the company's AI software. It's going to have Apple Intelligence. Those features continue to roll out. So lots of different positives and lots of things that look similar to the iPhone 16 lineup. Of course, there are differences here. Not every single feature is going to be available, but certainly it comes at quite an attractive price point for some, I guess what you could say affordable, because it's going to go on sale for just under $600, $599, but it is still about $170 more expensive going back to that iPhone SE that it's replacing.
Does it go far enough, though, Annabelle, in helping Apple make some inroads against its competitors?
Well, it's certainly going to be a really interesting one to watch. Apple really wants this phone to perform well in India, for instance, and it also wants it to perform well in China in particular. In China, Apple lost around 11%. We saw sales dropping significantly in the last quarter, around 11%. Generally, the iPhone saw sort of a weak sales period for the holiday quarter. They were sluggish, down around 1% as well. So there is that hope that this can really help with reaching sort of the lower end of the smartphone market. But as I said, some of those features that are found on pricier versions, rather, those are missing. One thing that is interesting to note is that the iPhone will have an in-house modern chip, and that's called the C1. So essentially, this is Apple's efforts to break away from Intel, or Qualcomm rather, and start to produce more of their semiconductors in-house. That's an interesting movement. It allows the phone to connect to the cellular network, so it gives you greater access when you're not within range. So I guess I don't want to say time will tell, but I will say time will tell. We'll see if it really helps it compete, given just there is so much competition, particularly from Chinese smartphone players as well, that have very innovative products and also price attractively.
Absolutely. Bloomberg's Asia Tech reporter Annabelle Drewler's there. Thanks so much, Annabelle, for your reporting. Thanks for joining us. Now, for a look at some of the other stories in the region that we're following. China plans to ban private companies from mining rare earths, further tightening its grip on the strategic sector in its trade war with the U.S. Beijing's draft rules propose only large state-owned groups can mine, smelt, or separate the minerals. Rare earths are used in everything from wind turbines to EVs and have been a key part of China's past trade disputes. Also, Prada is evaluating the Versace brand as it weighs a bid for the Italian fashion company. Bloomberg has learned that Prada kicked off a full review after gaining access to Versace's financials and sales figures. Versace reported an operating loss of $21 million this year and a 15% year-on-year decline in revenue for the third quarter. Now, a quick check at your markets before we let you go. A bit of downside for U.S. equity futures right now, but still S&P futures closing Wednesday S&P closing Wednesday at all-time highs. Eurostock 50 futures trading a bit sideways, but we'll see how the rest of the day shakes up. That's it for Horizons Middle East and Africa, though. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.